Talk more on the markets with Eronmosele Aziba, one of the investment analysts at Afrinvest. Good morning, Eronmosele. Thank you very much for joining us.
Good morning, Chimeze. Thank you.
So let's begin with the equities. We saw a kind of a reversal in trend yesterday at the market. How would you describe that trading activity yesterday?
Okay, thank you. So the market actually started the week on a positive note, but we had 2 days of decline on Tuesday and Wednesday, and we saw it rebound yesterday as investors took position in some market bellwethers. So you had, especially in consumer goods sector, so you had likes of Nestle, Nigerian breweries lifting the market. Like you mentioned, the four of the five sector indices were actually up yesterday as well, save for the banking index, as we saw some profit taking in Guarantee and some other banking stocks. We dragged that. But generally, sentiment in the market still remains positive. If you look at market breadth, so looking at the ratio of gainers to losers in the market, it shows that there's still a generally positive sentiment. And from trading activities that we've seen in recent weeks, we believe a lot of investors are starting to position ahead of the release of Q3 2017 earnings, which are expected to be largely positive, and this has been a major determinant of trading activities.
So what companies, talking about the third quarter earnings now, what companies do you think investors are really putting their interest in to see what they are going to come up with?
Okay, so first of all, I think a lot of investors' interest is centered on the banking index. I mean, despite the challenges that were faced in 2016, we saw the resilience of the banks churning out positive results, and this has been sustained in 2017. So when you consider the fact that we've seen a lot of macroeconomic indicators actually improve, it's only natural that you'd see a resultant impact on earnings of these companies. And like I mentioned, most of the banking stocks, so you look at the likes of Access, UBA, Zenith, Guarantee, expected to churn out positive results. And even for some of the other sectors, so in the consumer goods sector, we know the economy has come out, the Nigerian economy has come out of a recession. We've seen manufacturing PMI improve steadily for a greater part of the last 4 to 5 months. So we're seeing improvements in macroeconomic fundamentals, and we believe this will be reflected in performance. So this is the major reason why we have a generally positive outlook on earnings for the period.
Now, yesterday we did note that the banking sector actually was a drag, at yesterday's trading session, and the IMF in its recent report actually raised concerns about the Nigerian banking industry. Do you think that could have helped in driving that kind of sentiment that we saw? And do you think that is also going to have some kind of implications towards the sentiment investors are probably going to have towards the banks, for the rest of the year?
Well, maybe not necessarily. What we saw yesterday was majorly, we know GTB is the most capitalized stock in the banking index, and we saw some profit taken in that stock yesterday, which was what sort of dragged the banking index. But I mean, the Nigerian banks generally, especially the tier 1 banks, have been able to demonstrate their resilience amid tougher operating conditions. So even with the weakening in the domestic currency, we've seen the impact it had on their capital adequacy ratios, but they've still remained largely above the minimum guidance from the CBN, which sort of shows that the banks are still in a largely healthy position. So we don't think this would necessarily have any direct impact on the banks. We don't expect to see any knee-jerk reaction from investors based on the statement.
No, okay. As an investment analyst, what kind of opportunities are there presently at the equities market?
Okay, well, if you think about the fact that we've seen a rally in the market since April, there have been a lot of questions with regards to are the stocks overvalued now? Is there still potential for upside? But if you remember the fact that most of these stocks were grossly undervalued in prior years cause of challenges that we're having, we've started to see a lot of appreciation. So for an investor who is coming in now, maybe your upside might be somewhat limited because we might be at the tail end of the rally, but there's still potential for upside. So, for instance, in the banking sector, you still have the likes of Access, UBA, that are still trading below 1 times price to book, and we believe there's still a lot of opportunity for appreciation in those stocks.
Okay, let's look at the fixed income markets. What's driving the moderation and the short-term yields?
Okay, so what we've seen in the fixed income market has been majorly driven by demand and supply dynamics. So we noticed that the CBN in their OMO auctions that they've been conducting, the 364-day instrument has sort of stopped issuing 364-day instruments. So there's been a lot of focus on shorter tenured instruments, and as a result, we've seen increased demand even in the treasury bills markets also. So we've seen rates sort of moderate with more investors coming in, more buying interest. We've seen rates come down, and it has had a resultant impact on even domestic bonds market. So generally across the curve, we've seen rates moderate as a lot of investors are starting to turn back to the market. Also, looking at the fact that there's an expectation for a moderation in interest rates in the first half of 2018, according to guidance from the last MPC meeting. So a lot of investors are starting to take position ahead of this and key into the attractive opportunities that are currently there. So it's increased demand basically that has been driving the moderation that we're seeing.
Now, what about the interest that seem to be returning to the longer tenured domestic bonds?
Yeah, so like I mentioned, supply for some of the shorter tenured instruments has sort of reduced. So we've seen a lot of investors take advantage of the higher yields that we currently have on longer tenured instruments before we start to see a general moderation across the curve. So that's basically what it is. Investors position ahead of that expectation.
Okay, so looking at the market generally, well, today would be the last trading day for the week. Looking at next week, what is your expectation?
Well, I mean, we expect to see a similar trend, especially in the equities market. A lot of investors positioning ahead of Q3 earnings releases. As of now, we haven't really seen a lot of companies turn out their results, but from next week and the following week, we expect to see a lot more results coming out. So we should see some appreciation in especially the bellwethers in the market, and this should keep market performance positive.
Which sectors are likely to post their earnings first?
Well, I mean, we might start to see some from the consumer goods sector, maybe industrial goods, and even some of the banks as well.
All right. Thank you very much for your time, Eronmosele. Aziba Eronmosele is one of the investment analysts with Afrinvest.